Hi, I'm Matt Rose, and welcome to 3 Minute Tech. These are the videos where we answer your financial planning questions without all of that technical jargon. Today we'll be talking about something that's really important. If you're a small business owner or a farmer, or know anyone who owns a small business or a farm, this is really important. We're talking about the small business capital gains tax concessions. And these concessions can provide hundreds of thousands of dollars in tax savings. So what are the small business capital gains tax concessions? These are the concessions available to small businesses or farmers when they're selling some of their assets. This is in recognition of the fact the majority of their wealth is tied up in their businesses and their farms, and this is a measure to help them provide for their longer term retirement. So to be eligible for the small business capital gains tax concessions, you need to meet a number of eligibility criteria. Now this stuff is really complex, and it's important to seek advice from your financial advisor and from your accountant. But simply put, the 4 concessions or the 4 eligibility requirements to get the concessions are: 1, you have to have a capital gains tax event. 2, without the concessions, there would be a capital gains tax liability. 3, you're selling an asset that is considered an active asset. And 4, you're considered a small business entity, which in rough terms means you either have a net turnover below $2 million or a net asset position below $6 million. So when you're looking through those eligibility criteria, the question you might be asking yourself is, what is an active asset? Well, an active asset is something that's readily available for use in the business. This can be land, this can be machinery, but equally if you own a business where your primary value is goodwill, the clients you have and the name that you've built up, this too can be considered an active asset. So what are the concessions that we're talking about today? Well, there's a rollover concession, there's a retirement concession, there's a 50% active asset concession, and lastly, there's a 15-year concession as well. And we'll talk about each of those in a bit more detail. So what is the rollover concession? This is where you sell a business, but you're going to use the proceeds to purchase another business or another asset for the business. In this case, you can actually roll over or defer the capital gains tax liability. What is the retirement exemption? Well, the retirement exemption or the retirement concession enables you to exempt up to $500,000 worth of the capital gains. It's effectively a free kick to be able to provide for your longer term retirement. What about the 50% active asset reduction? Well, this concession enables you to reduce the capital gains by a further 50%. Now remember, if you've held the asset for greater than 12 months, you potentially can get the 50% general discount as well. So what that means, you get a 50% general discount, a 50% active asset discount, and your capital gain is actually only 25% of the gain that you've made. And lastly, we have the 15-year exemption. Now this exemption is huge and the potential savings are magnificent. I'm talking tens, if not hundreds of thousands of dollars of tax. If you've owned an eligible asset for greater than 15 years, you can potentially exempt the whole capital gain. If you have an asset that's worth $10 million and you purchased it for $1 million, that's a $9 million gain that you may not have to pay any tax whatsoever on. So getting this right is really important. So in today's case study, we have Ned and Caitlin. Now they're 3rd generation farmers, but unfortunately their 3 kids are not interested whatsoever in returning back to the farm. So they make the really difficult decision to sell their farm. Their farm right now is worth $7 million with a cost base of $2 million. They go through the eligibility requirements with their accountant and with their financial advisor, and given that they've owned the farm for greater than 15 years, they can sell it and not pay any tax whatsoever. This is a huge benefit. But like I said before, it's important to get it right from the beginning. So what have we learnt today? Well, we know the small business capital gains tax concessions can be really beneficial, but it's important to seek counsel from your trusted advisors and a financial advisor or your accountant to get the details correct from the outset. Doing the preparation is very, very important here, but equally, it's important to make sure that you're aware of what the benefits can be as well.